Hey guys, I'm just going to try and do some work solutions of this from the textbook, give you an idea of how to go about answering questions. So to find this, we go to our notebook, where usually you see PowerPoint slides all here, and next one down, exercise solutions. So in here, you'll have this Word document here, which will be the workbook template, and here's the question I'm going to look at today, exercise 9.2, so just the cost of inventory. So let me know if it's worthwhile, and we'll get started. Alright, so in OneNote you can full screen just by using this guy up here, and yeah, here, exercise 9.2, cost of inventory. Okay, so as at 1st of January 2025, Comfy Couches had 8 couches on hand with a cost price of $1,590 each. Okay, then on the 3rd of January, business purchased 10 couches, okay, from Wilson's product for invoice 65. So that means that this is your account payable. Alright, so in these type of questions, we usually get given a heap of information here. Okay, so we get supplier's price, 15,000, so that's the cost of the actual item by the supplier. And then in the process, they've put on an anti-stain treatment, and so there's a subtotal of 16,300 and GST of 1,630, so total 17,930. Alright, so also we have each couch has a selling price of $4,000 plus GST and a special advertising campaign to sell the couches costing $2,200 including GST. Okay, so including GST. Okay, so to start off, explain how valuing the couches at their selling price would breach both verifiability and faithful representation. Okay, so we've got two marks here. Oh, can I actually, what? No. Okay, so guys, I'm going to open up the document now, and in here, I'm going to answer the first part of the question, which we go back to, back here, explain about that the selling price would breach both verifiability and faith. So I'm going to start with verifiability, okay, and the selling price cannot be verified by a source document as the sale has not yet occurred, hence breaching verifiability. Okay, and then also the faithful representation. Has, let's see if I could type a lot better, would get better, but breached as, would be breached, sorry. As the selling price does not represent the real world economic value of the economic benefit that is complete, free from error and bias. Okay, so next we have the, go up the top here now, calculate the cost price of one of the couches on 3rd of January 2025. Okay, so here we have supplier's price of 15,000. So we're looking for all costs incurred in getting inventory into a condition and location ready for sale. So that 15,000. Anti-stain treatment, okay, that's before it gets to your store, 1,300. Okay, but because we purchased 10 couches, okay, we need to divide this by 10, okay, or both of them by 10. Okay, so therefore it's going to cost 1,500 plus 130, so in total 1,630 per couch. Okay, so over here, I'm just going to drop that down, 1,630. Alright. Is this playing still? That's a good question. Okay, so part of this question, there's referring to your answer to part B. Explain your treatment, okay, so of the advertising campaign. So that's this part here. Okay, so this is after receiving. Okay, so after it's ready for sale. So therefore, not included. Okay, so over here in our workbook, simply time the advertising would not be included in the cost price, as this is a cost incurred after getting the inventory into a condition and location ready for sale. Okay, so there you're using the definition of the cost of inventory, which is getting the inventory into a condition and location ready for sale. And this one is after getting it ready. Okay, so using the definition there. Okay, just to extend that a bit further, okay, it would, not it, the advertising would be recorded as a other expense. Okay. Alright, so that's that part there. Okay, next we have record invoice 65 in the inventory card for couches. Okay, so what we want to do now is we know that we've already included our 1,630 per couch. Okay, so that's the cost price that we are going to use here. Okay, so when we go into here, oh, I forgot what source document it was. So it was invoice 65. 65. Now in, we got 10 couches at $1,630 each. Okay, and so therefore 16,300. Thank you, table, for not being good. So now we have, why is this on the second page? Damn it. 8 at 1,590. Okay, so we still have those ones. And then on the next day, for some reason, I'm just going to put control into here so that it looks a bit better. And then we also have 10 units at $1,630, which is 16,300. Okay. Alright, finally we have the record, again, invoice 65 in the general journal this time. Okay, so back over here on the, I didn't put the date in up here, my bad. So January 3. Okay, so on January 3, we purchased inventory and GST clearing, of course, additional on top of the and account payable. What was old mate's name? Wilson's Products. Okay, so Wilson. Okay, so 16,300, 1,630, and total invoice price is 17,930. Okay. Now, it doesn't say not to include a narration, so we best do, so therefore we just put credit purchase of 10 couches, and of course the invoice or source document number. Okay, so invoice 65. Alright, well that's it, I think, for this question. Sorry guys, just trying to figure it out at this stage, but you'll find that now, once I hit save, okay, I'm going to save this, then I'm going to close it, save, yes. Okay, now I'm going to go to here, I'm going to open it up, and over here is not what I was after. Oh, there it is. Okay, so there it is there. Still here on my second screen. Okay, so that's it. Alright, so if you can let me know whether it's going to be worthwhile working through this or not. Okay, this one obviously took a bit longer than hopefully they will once I get used to using the computer. But yeah, be keen to know if you think it's useful. Cheers guys, see you around.